Welcome back. Well, the market is closely watching potential effects on CDMO players if, in case global formulation companies redirect capital towards building US manufacturing capacity, which could hence possibly reduce offshore outsourcing. While this does pose a risk for Indian pharmaceutical companies, Indian CDMOs, as of now, they remain well positioned to capture opportunities due to factors such as China Plus One and the US Biosecure Act, which aims to move dependence away from China. Listen in to a slice of a conversation with the management of Sai Life Sciences, who I had the opportunity to interview from the Genome Valley. Listen in to Siva Chittor talking about a whole host of factors which are actually driving CDMOs up right now.
We've announced a 700 crore total investment for the current financial year, of which a significant portion of this will happen within Genome Valley. We're doing multiple things within this. We are actually adding additional discovery capability. We've acquired around 10 acres of land in addition to whatever facilities that we've got. That will help us add discovery services capability. We're adding process research capability and peptide research capabilities in the current facility that we are in. That would help us get into new modalities. We're also adding additional capability within biology. We're going to be adding additional equipments and things that would kind of help us do integrated discovery services. That's really the focus for this year. That's really what we are building.
Okay. Well, you are a CDMO company, so give us a sense in terms of the kind of opportunity you might be seeing. All of your peers are talking about incremental RFPs, a lot of inquiries coming through because of factors such as China Plus One as well as the US Biosecure Act, which could be in the pipeline again. What is your experience with?
I think the last 12 months has been a significant uptrend with respect to what we are seeing in the entire industry from an India perspective, primarily driven by diversification theme. I think India for a long time has not had due share with respect to the new chemical entity business, and that is changing. What we are seeing today is customers coming and talking about a lot more strategic portions of outsourcing, people trying to pick up their partners that they would want to work with for the next few years. China has had an early mover advantage in terms of having scaled up faster, but today what the global pharma companies and innovators are looking at to actually how do you rebalance this portfolio, which is kind of skewed one way. That is going to drive growth, not just for us, but I think for the entire industry for the next few years. That's really what we are all excited about.
Okay, but how much of this opportunity could probably be, limited because of the scale of the CDMOs?
I think industry will give you time. Pharma doesn't do a one-shot move into anything very specific. There are a few factors that become very important. I think one is capability and talent, that you need to actually have the right set of talent, something that we've always built. We also believe research and development will play a significant part of how you would scale up later. A forte of Sai, that's something that we've built over the period. If these two are aligned, and if your infrastructure is aligned with the Western standards, I do believe that the growth is a continuous process. Pharma by nature is a little conservative. They will start slower. They would give you enough time for you to grow. And as long as there is no stoppage in terms of investments from right companies, outsourcing will continue to grow.
So how much have your RFPs increased in the past 1 year?
We generally don't track it by RFPs because we believe conversations are much more important.
So how much have conversations increased?
We've seen significant strategic conversations, both in terms of dedicated development centers or dedicated development partnerships that we've signed. This year we've seen customers coming back to us talking about very specific initiatives where they can start working with us on a longer term. Something on the development side that we haven't seen before, and I think that's a big trend in terms of how longer term outsourcing and manufacturing will go.
So when does this translate into numbers, and how much of it rather translates into numbers?
For larger numbers, it would take probably a couple of years, but I think you will already start seeing changes in terms of numbers, margin, and growth profile. Touchwood numbers have been good for the last 3 quarters. We've managed to meet numbers or beat numbers for all the 3 quarters that we provided, and we think that the trend is continuing as an industry.
So you did 300 crores in your CDMO business. There was a huge rise or increase in your CDMO revenues. Is that a sustainable run rate now? 300 crores becomes a base?
Within the CDMO industry, quarterly numbers are always very difficult to predict because we don't control the end product. Our end manufacturing or CDMO scale up starts based on a customer PO. Our longer term trend is to a 10 to 15% growth rate. That's really what we have presented
In the CDMO business.
on the CDMO business. And I think that's something that we continue to
are
guide.
your numbers showing the impact of China Plus One already?
Yes, definitely. I think there are multiple pieces that we can see. I think when we listed, we talked about specific tech transfer projects where customers have reached out to us for a non-Chinese source for commercial projects. We've done more than 12 projects over the last 2 years. Some of them already become commercial. Some of them are in the stages of becoming a commercial supply for site. This is very important because the customer is looking for a non-Chinese source. It's a product that's already commercial. Now somebody needs to work on it to make sure that it still meets the regulatory guidelines and you can kind of scale it up.